Hello guys, so good evening. Welcome to the SMB Show live. Now, this is going to be the number one place where you can get your news on what's going on in the SMB market in the UK. We'll be covering deal volume, buyouts, distressed deals, finance, and also we'll be speaking to real deal makers and business owners that are active right now on Main Street. We have a special guest today as well, but we do have a few things to get through first. Now, we will also have an option for listeners to dial in. You can ask questions about any topics that we're covering, and we'll also have a segment called the Deal Desk where you can, dial in, ask, any of the guest questions as well, anything on your current business or maybe a deal that you're working on. So send us an email to the live@thesmbshow.com. If you do have any questions, guys, feel free to do that. Now, that's live@thesmbshow.com. So to get into today's show, so first I'm going to start with News Round. So a good place to start is probably with, Rachel Reeves being back in the news. This time eyeing a tax reform to help small businesses expand. Now, with the budget coming up on November the 26th, there's a lot of speculation around, tax increases and also, worries around inflation, which isn't really sitting well with the general public or small business owners either at the moment. Now, Rachel Reeves actually said that she thinks that our economy isn't broken, which is quite interesting. But look, the government is under a lot of pressure at the moment, especially to balance, its spending ambitions with fiscal discipline, especially, in the light of the public sector debts and deficits. So it's going to be an interesting couple of weeks building up to the budget. And, we will be following this over the next couple of weeks as we run up to the budget as well. Now, another few notables, so which are kind of related to this. The OECD forecasts the UK will have the highest inflation among the G7 nations in 2025, so around 3.5%. So definitely something to note, especially where they're anticipating interest rates to gradually come down, probably hold a few more over the next interest rate announcements. But we'll see. Interest rate meetings. We'll see what happens. 3.5% is, almost double where they want to be. So we'll see what happens over the next few. Also, some other good news for businesses, especially, a lot being, been under a lot of pressure at the moment. The government has actually injected £4.5 billion into the British Business Bank to boost small business funding. So, yeah, it's definitely good news. The funding package builds on, several key finance programs that are run by the British Business Bank, which is actually meant to make it easier for small businesses across the UK to actually access money, which has been a massive issue. I feel like there's too much restriction on small businesses. How are small businesses meant to grow with such heavy restrictions, especially on funding in general? So a part of this injection into the British Business Bank, of course, firstly, there's the Growth Guarantee Scheme, or the GGS, which is basically a loan guarantee program, which actually launched in 2022. That's now expected to be extended to 2030. But look, the government guarantees 70% of the loan value, which does give lenders a lot more confidence to support companies. But yeah, this is just the reinvention of the RLS, which was reinvention of the C-bills, which was reinvention of entrepreneurs, something I can't remember what it was called. But, it's just a new term, new acronym that they've picked to call that scheme there. And then, for startups, there's actually the Startup Loan Program. They've received an extra $1 billion in lending. So they're actually aiming to issue up to 70,000 loans to new entrepreneurs over the next couple of years. So, yeah, that's pretty good. They've also increased the average loan amount on that as well to 15K. So it's not a lot really in the grand scheme of things to get your business off the ground, but I guess all of it helps, and definitely want to try and stimulate, just growth in general. And, small businesses make up, a lot of the economy, employ up 60% of the workforce in the private sector. So it's important that, they do have the support needed, which is a little bit frustrating when you're operating on Main Street, when you see the access to capital that, the public markets have chance to unlock all that liquidity. But look, this funding is going to be distributed through a mix of traditional banks, but also a lot of the alternative finance providers as well. So as I mentioned, the restrictions, hopefully those restrictions start to loosen on the lending to small business owners and also deal makers as well. Yeah. But now another interesting topic especially in the funding space is Shawbrook's acquisition of Thincat. Now, very, very bold move from Shawbrook. And the thing is, Thincat actually uses £700 million of securitization warehouse from Barclays and Citigroup. So it's unclear how Shawbrook will handle or even maintain the warehouse arrangements as of right now, because that could actually affect short term is definitely the flow of capital to Thincat's type of SME lenders. So, but look, either way, I do think small business owners are quite excited to see what happens here. I think it's, like I said, it's a very bold move, and hopefully it's definitely good for Main Street deal makers. And then something else that's actually I thought would be worth mentioning. So White & Case has produced a report that suggests a tough fundraising environment across both public and private markets, and they're actually thinking is pushing companies in general to consider M&A deals as potentially the most reliable route to growth. And they just predict, further M&A activity, and they think that's just going to be inevitable at this point. So, yeah, I think that there's a lot going on. There's a lot of positives to come out of, a lot of what we see at the moment in the media, especially coming up to the budget in November. I think there's a lot of, people in general, not just small business owners, people in general, quite concerned about what's potentially going to happen. So that's a bit of what's going on at the moment. Like I said, we'll be keeping up to date with everything that goes on that has any relation whatsoever to small to medium-sized businesses. Now, we have a few questions that has come in. So I did post this on Instagram before we dived into this, and a few questions have come in. So I'm going to get through a few of these before we bring the guest on. So let me pull them up. So I did. Cool. So our first question is from Scott, which says, what security can I give to a business owner on the deferred consideration to give him comfort without losing control? So, okay, so without me knowing the exact details of the deal, because I'll make a few suggestions, but of course it really depends on the mechanics of the deal and what conversations you already had. But the things that you could use while at least trying to find somewhere in the middle between you and the business owner. So, and I wouldn't advise offering all of these, of course, but these are some of the things that you can do when you're going back and forth. So first of all, you could offer a distribution cap or a dividend policy. You could offer a debenture over the company's assets or cash flow. This is obviously subject to, the existing secured lenders, if any. Depends, like I said, what business you're buying and what's going on in the deal. Then you could offer a share charge. So, if you default, then the seller can, repossess the shares, which, isn't always ideal for the seller either. It's definitely a good place to start. But, sometimes you also got to think, well, if you've done something in the business that's made it worse, are they going to want to take those shares back? So, there's a few things to weigh up there, but it's a good place to start. You could look at sort of information and oversight rights where you actually give full visibility of reporting, or you could even give them a board seat until they're fully paid as well. If there's a deferred consideration, then I suppose that's a good place to start, because even though the last one isn't exactly security, it's a nice offering, and it makes the whole thing very transparent, which helps. Because of course, bottom of the pile is going to be a personal guarantee. Now, if you do decide on this, which I don't recommend, as these are business purchases, not personal ones, but if this is what it takes to get a deal over the line, and you're happy giving a PG, then you're probably going to want to discuss limited recourse guarantees with your legal team. So it's actually linked to certain triggers, or maybe capped at a certain figure, because I think it's important. First and foremost, you go back and try and understand why they're asking for security, and what's the thought process behind it. Of course, people want security, but why is that at the forefront of their mind at this specific time? And looking back at some of the conversations you've probably already had, but just having a general conversation with them. There are a few things that I think could help while you negotiate, but you obviously want to offer all these all at one point, but there's a few go-tos there if you have to compromise when you're negotiating. So next one is, so Ahmed asks, I'm finding it hard to focus with all the opportunities online. I want the fastest route, as I don't want to waste any time. Actually, it rhymes as well. So this is similar to what I actually heard Sam Altman talk about, something similar recently. So he talked about how everything has become so instant and high frequency, and how long-term commitment has just become really boring, right? Which for him, he thinks, and I agree with him, this is what makes time quite a large arbitrage opportunity, because first of all, it's the best way to generate value. And the great thing about M&A is you're typically buying something that has generated its value already over time, and usually decades, right? So you're already buying consistency and history. So for me, it's really working out what you want out of life, what you want your life to look like, and then just finding the right vehicle to get it. I wouldn't focus too much on how quick you get the thing you want. It's more about making sure that you get it for sure. And it's gonna require work, whichever way you look at it. I guess it's just making sure you're picking the right vehicle to get it in the first place. Next one. So this individual has wanted to leave their name anonymous, which is fine. You guys are happy to leave your name anonymous if you do want to ask a question. So question is, really struggling to get invoices paid and starting to feel it. We are £2 million revenue manufacturing company. Any ideas would help? Okay, so now when it comes to manufacturing companies, now one of the most frequent constraints would actually normally be the cash conversion cycle, which also seems to be the issue here. Now, especially with thin margins in a lot of these businesses, there's not a lot of room for error. So, if you're not then collecting cash very well, you also end up with CapEx limitations, because you're going to have a lack of funds to actually reinvest in new machinery and different things that you need in a manufacturing company anyway. So it does start to cause serious issues regardless. So I guess for anyone listening that's already in manufacturing or looking to buy a company in the sector, some of the other things I think people should think about, if you are looking in this sector, first of all, it's going to be capacity bottlenecks, supply chain dependencies, inventory management. This is one that many people get wrong. Wastage. A lot of the time, you will probably find some customer concentration in this sector and some product mix constraints as well. So there's just a few things I thought was worth you guys should look out for. There's going to be others as well. But when it comes to manufacturing, the first thing that comes to my mind are those, we've probably analyzed, I don't even know how many manufacturing companies, and the same things keep coming up. So anyway, into the question. So first of all, build a 13-week rolling cash flow model straight away, as quick as possible. You can identify, the daily, inflows and outflows, but obviously you're tracking these daily and weekly, but especially at the start, track these daily, start to get a good understanding of it. You don't want to have any surprises. And then I guess since cash collection is the problem, the focus really needs to be on, accelerating receivables and try to stretch out the payables as strategically as you possibly can. So it's probably also worth, looking at, the revenue per customer and just having a bit of a deeper dive into it, because, looking at, say, the direct cost per customer, so it could be the materials, labor, maybe shipping or packaging. I don't know what manufacturing you're actually in, and all the services that you provide, but then also looking at the indirect costs per customer as well. And then just try to look at the payment terms that's been agreed. Some of these are probably quite stale and also on stale price, and it's probably been like this for a while potentially. I'm making a lot of assumptions here, but just to get a better understanding. But try to find out who pays on time and who always drags paying out. You should probably see a few trends there, because then you could then if you want to go into a bit more deeper, then you should calculate the gross margin per customer as well, because some customers may have high revenue but maybe very low margin as well. And then also look at how resource heavy a customer actually is, because then adjusting working capital impact based on these things as well. Because look, don't be scared to fire a customer. Not all revenue is going to be good revenue, and sometimes in some cases, cutting the bottom 10 to 20% of the customers actually often frees up capacity for better paying ones. So I'll always really think about that as well. But yeah, look, in short, you want to build a customer P&L, treat each customer like its own mini business. And, once you see, contribution margin, resource intensity, and working capital drag, the truly profitable customers then stand out quite easily. So really just need to try and stabilize, cash and liquidity, get full control of ops as quick as possible, and probably have a bit of a commercial reset. Obviously there's a lot there, but yeah, it's a good place to start. You're trying to get to the root cause of the problem and find out where the real constraints coming from. The fact you're struggling to collect cash as quick as possible, there are a few things that you can look at quite quickly. So next one is, will AI replace jobs? One moment, there's a few comments coming in. Let's have a look where they're coming from. Evening, Dom. Evening, Zach. Okay, let's pull the question back up. Will AI replace jobs? How can I put this in the best way to look at it from both sides? Because it's a deep question, and I don't think there's a straightforward answer to it. So look, the thing is, technology itself is deflationary, right? So tech drives productivity gains and does it more with fewer resources. Okay, so and look, plus software and AI, at scale, they can scale at almost no additional cost per user. Okay, so these are some of the things you need to consider, but there's a lot more to it, because look, AI is going to replace many routine or repetitive jobs, whether people like it or not, but it's also going to create new ones, just like tech has in previous cycles. So if you look back at history of tech, for instance, in the 90s, right, there was tons of job displacement due to the internet. If you think of, I don't know what, travel agents, print newspapers, video rental, millions and millions of jobs were lost throughout that period of time as things were transitioning online. But if you actually think, look how many jobs were born as well. You look, and also business in general. You look at all the businesses that then created jobs that were born. E-commerce, online advertising. There was tons that came off the back of it, and then we've seen that grow exponentially, since the 90s. Okay, so we see this happen every single time. So yes, AI will replace a lot of jobs, of course, but I would just say, look, we have to embrace it, right? Look how many people just sat on the sidelines of the internet, don't sit on the sidelines, dive in, educate yourself, and use it as a tool to make yourself better. There's no easier time in history right now. If you have access to look, if you're listening to this stream right now, you have access to Wi-Fi, right? If you have access to Wi-Fi, you have access to all the information you need to develop a new skill. The hard problem is, if we go back to the question where I give the Sam Altman reference, that the problem is people don't want to put the time in. You have all the resources needed right now. There's so many things that you can do to improve yourself. You can learn things very, very fast. You can use AI to learn things very, very fast as well. Even books, right? People ask me all the time, what books do you recommend? Like, we're in a situation now where you can pretty much get, ChatGPT or Gemini or Claude or, one of the LLMs to summarize a book, take out the key takeaways and make it relevant to you and the things you're looking to take from the book, because a lot of books there's a lot of filler in books as well. So there's no better time. There's never been a better time in history to be able to educate yourself on something very, very quickly. So that's all I would say about the AI thing, and just dive in. Then, okay, they'll take this last question, and then we're going to bring our guest on. Our guest is in the waiting room, ready. So this one is from Property Princess. UAE acquisitions, equity contributions, PGs always required, and multiples, example 3 times. Okay, so obviously there's a lot to unpack there. I think it's a few questions. So with UAE acquisitions, funding's definitely a little different to the UK. Now, look, there are a lot of commercial banks that offer, traditional debt financing. First Abu Dhabi Bank, Emirates MBD, Mashreq, ADCB. They do actually provide acquisition finance, but they're very, very strict on who they give it to. They're looking for very established buyers, or deals with hard collateral, and businesses with very, very strong cash flow as well. And they're also a lot more conservative. They don't really offer full leverage on leverage buyouts like or acquisitions in general in the UK, like the UK or the US is very, very different. They are going to want an equity contribution of probably anywhere between 20 to 40%, depending on the deal. Now, of course, you can get more creative with it. We acquired a real estate agency, No Money Down, out here a few years ago. We've had a few inside the 5D program that have acquired, learning centers, nurseries. We also have one at the moment in the process of buying a manufacturing company out here in the UAE. So yes, you can do it. You just have to get a little bit more creative and really work on deal structure, probably even more so, even though I'm very much for working on the structure of the deal and making sense of it and making sure it actually does make sense in the UK and US and Canada, Australia, etc. But the UAE even more so, because you have to really understand the dynamics of the deal. But also, look, there's a lot of private equity, debt funds, family offices out here in the UAE. They're very useful for mid-market deals at least. So it depends on the size deals you're looking for. And then to the next part, multiples. So if this is for the UAE, so look, multiples are always going to depend on size of the business or industry. At the end of the day, a business is only worth what someone's willing to pay for it, regardless of what somebody thinks the average multiple for their business is in the sector. It's only worth what someone's willing to pay for it. Okay, and until someone pays X for it, it's not worth X. Okay, there's a lot of assumptions to be made, but also in the UAE, they fluctuate massively, from my experience anyway. Some are very, very low, and you start to think, whoa, why is this business so cheap? And others are just ridiculous. It's super, super high. So I think, the UAE, I don't think it really hasn't really a cemented M&A environment out here yet. So I think that, yes, businesses get acquired and, change hands, but, it's not a very mature environment for it at the moment. So I think that, some of the expectations are crazy, and then some are probably, wildly too low. Even quite recently, I went to visit a business with a friend of mine, and if you, the price they wanted for the business based on the rent increase of the building he was operating out of, the business, they would have to pay this individual to take it off their hands. It was just the way they come to that valuation. They brought a consultant to the table, and we sat with the consultant, and they couldn't really understand how they got to that figure themselves. So I think this market's still maturing, and I think there'll be a lot of activity in the coming years. But obviously, financing's always going to be a bit of a constraint in the UAE because the laws are different as well. So that's definitely something to think about as well. Okay, cool. So I think this next part now, we're going to bring on today's guest. Feel free to, if you have any questions, guys, remember live at the smpshow.com, and or you can ask in the comments as well. I will be checking the comments too. Our guest this evening is Lewis Bassett. Now, Lewis is actually an equity partner I'm an equity partner, on one of Lewis's deals that he's done. Now, Lewis has actually acquired 4 companies in the last probably year and a half, 2 years, took action very, very quickly, and has been very active. Lewis has actually rolled his sleeves up, took this with 2 hands as well, and actually grown these companies incredibly well, and now also offering his services to other companies, helping them grow in the exchange for equity as well. So we're going to ask a lot of questions. If you have any questions for Lewis throughout this stream, guys, feel free to pop them in the comments, and we'll get them answered as quick as possible. So let me just make sure Lewis is set up okay. Okay. How's it going, Lou?
How's it going, D?
First of all, really appreciate you joining us. Yeah, so I think I'll give you a pretty good intro. So I guess a good place to start would be, first and foremost, you had a background of barbering, you've worked for some other companies as well, but what was the thing for you that made you even want to consider M&A as a tool, really?
Yeah, I think probably about 2 years ago now, actually, coming from the industry that I did, and actually, like you just said there about choosing your vehicle and seeing there was an actual ceiling on what I was currently doing. Even though I was, doing okay, I thought that at my age at the time, I was earning a decent salary. I just thought there was always going to be a ceiling. There was no potential to really, do the things that I, always visioned and dreamed of. Even with, working all the hours under the sun, the overtime, I just think there was always that roadblock in the way of me getting to where I wanted to be, essentially.
Cool. And you took action very quickly. A lot of the time, people are trying to find proof of concept, because it kind of sounds like, how is that possible to, buy a company, zero money down, something that is profitable, and which is actually a good business in general, right? Is a hard to get your head wrapped around, but you kind of took it with both hands, went out there, spoke to a ton of companies, actually had terms agreed for 3 or 4 in various different sectors. So when you first actually dived into this, what was the things that you were looking for in a business, and what sectors did you look for initially?
I was definitely looking for companies with a strong trading history. So definitely that was a massive factor for the criteria. We were searching for companies who've been trading for at least 10 years, strong sets of management accounts, a strong management team in there as well, and just consuming as much information as I could along the way. Although I did have a bit of background knowledge on the sector, actually come from a family of hairdressers. My mother's in the industry 25 years, so had a decent knowledge on the industry. But yeah, I guess sort of consuming as much information on the acquisition side of things before actually speaking to these business owners, and actually looking at the 5D portal. I think we spoke the other day on a Zoom call about how much information I probably consumed within 2 months. I remember just watching videos for hours on end until I thought enough was enough, and let's actually outreach these business owners.
Yeah, and I think you had quite quickly, you had terms agreed in commercial cleaning companies and companies in different sectors all around the UK as well, right? I remember it was a luxury commercial cleaning company in London, with basically operating in the most affluent areas of London, as celebrities on their client book. And that was, I think it was just before you pivoted and thought, right, let me look at something in a different sector. But you didn't really struggle to get it to a point where you was agreeing terms with a lot of business owners. You seem to be very good at building rapport, having conversations, and getting to the stage where they were happy with yourself, and also you was very good at putting the deals together as well. What do you think the defining factor was for those those things there?
I just think probably the main factor, we probably touch on it a bit, on the next sort of topic when we talk about the most recent acquisition. But like you just mentioned there, I think rapport and actually just taking action. And reps are moved out. I think you once told me, Dee, when I first started out, and actually speaking to these business owners, 5-6 times a week. I thought that was the only way to sort of get over, because you do have sort of like imposter syndrome. You feel like, should I be on these calls speaking about, these sort of large figures? But yeah, I think the key is just take action. And yeah, like you said, I think reps are moved out. The more you speak to the business owners and actually strip it back and realize you're only speaking to another human being who's probably aligned with you because they've responded to an outreach email. They obviously looking to exit the company. You're looking to buy. I think the quicker you get to realize that, the quicker you move forward.
Yeah, and obviously 4 acquisitions in quite short space of time. The most recent acquisition was a very profitable business in a very nice place in the UK. So talk us through some of the things that you've done in that business, because you guys have improved it massively in quite a short space of time.
Yeah, so we acquired, like you said, a business in quite an affluent area in the UK. 27 years trading, so really solid foundations. A really loyal clientele, and I guess it was more of a strategic acquisition to sort of build on what was already laid out for us. The opportunity there that we saw and obviously got over the line was only building on what the previous owner had put so many hours into over the past 27 years. And I suppose it was like digitizing those sort of channels that she'd built. So she'd built a creative team. It was an amazing brand. And they were probably under leveraged systems when it comes to like marketing and scalability. So yeah, we always had that vision of sort of, repositioning those traditional values with digital channels.
Yeah. And what's some of the things that you've done, where, as soon as like I think, the business owner's done an incredible job over those 27 years, built a real dynamic culture as well in the business. And you can see, but what's some of the things that you've done since that you felt has, helped the business grow?
I think within the first 30 days, we've, unlocked some pretty nice hidden gems. I think the biggest one probably in the first month was seeing the CRM system and the actual IP that the company had hidden away. I think there was around 14,000 email addresses on file which were not utilized. And they were basically email addresses of clients who, currently go to the salon, and, clients who've sort of lost touch. So it was about reconnecting with those guys, actually setting up an email marketing campaign. And I think within the first 30 days of implementing the email marketing, we've seen some pretty, substantial returns. So that's just, one pillar, I suppose, we looked at with the email marketing. We also looked at some cost consolidation, probably a forensic review of all the cost lines, looked at suppliers, sort of energy, marketing, staffing. And then we introduced some benchmarks when it come to, ordering stock. I think just off the top of my head, we introduced a 6% net revenue for stock, just to get a hold of the costs, especially for a business that was quite new to us. I mean, the seller's going to tell you one thing when it comes to the financials, but until you actually get in there and get your hands on the financials, it's a different ballgame. And then the other thing we looked at was obviously optimizing the staff utilization, and we've done that through a set of KPIs and also optimizing the appointment times.
And if we rewind back a little bit, because you've been through the process multiple times now, you're doing a great job of growing the group, and now you're working on some other deals that we'll talk about in a sec. But what was the contributing factor to your deal flow?
The contributing factor was definitely Logan Room. So the software that we use to to get these calls booked in every day, I think I was speaking to around 15, maybe 20 some weeks, different business owners every week. The deal flow was, at one point it was we couldn't keep up with the demand. There were so many calls being booked in. But like we spoke about the other day, I definitely took the opportunity, even if it was a 5-minute call, to make sure that I got on every single call that week, because I know from past experience, just that one call can obviously change, your whole perspective on buying a business.
Oh, definitely. And I guess moving on to some of the things you're doing now, you're working with business owners in various different ways at the moment. Quite a lot of demand for your presence at the moment in various different businesses across a few different sectors as well. Definitely leaving your footprint whilst talking to them. What's like the long-term vision? Because you guys have quite a lot of opportunity on the table at the moment, and I guess it's making sure focus remains where it needs to be. But like, what's the long-term vision? And what's the 10-year vision?
Well, I think like you spoke about at the start, we've been actively involved now in 4 acquisitions and soon to be 5. There's a deal, as you know, very close to legals and being actually, completed. So I think in terms of the long-term vision, I suppose just keep doing the same what we're doing, double down. What we're doing seems to be working when it comes to acquiring and scaling as well. But I suppose, sort of diversifying as well. We got a consultancy package which is going to kick off within the next couple of weeks, which is in the same sector, but we are also looking to diversify, into it, sort of an adjacent market. But yeah, I suppose definitely growth through acquisition is definitely the within the next 5-year plan.
And look, you're still very young. I guess in this sector, a lot of the business owners you tend to speak to are a lot older. They're probably at retirement age. Have you had any pushback over the past couple of years with age, or is that,
Yeah, definitely. I think, you see 2 ends of the spectrum. I've actually been on calls today now. I'm actually, sort of 3 years in. I'm still getting, I suppose, talked down to by, these entrepreneurs who, have been in the game 30, 40 years. Sort of, I jumped on a call and they were saying, before you even say anything, I've done everything that you're about to say. There's nothing you can really tell me about business, which I haven't already encountered. But I suppose the more you take those calls, I've seen that happen probably 5 or 6 times over the 3 years. You sort of get used to it. And I think actually when you knuckle down and get into the conversation and start speaking about, what you're actually actively doing, that sort of, turns the conversation on its head and, can definitely progress with those owners. So, yeah, I just think the more calls you do, the better you get.
Yeah, definitely. It's all about reps. And you've become quite analytical throughout the process as well. Very much enjoy looking at, tracking KPIs, and also, and you started to understand the financials very, very quickly. It was something that I know you enjoy. How are you finding the new AI prompts when it comes to evaluating the company and looking at the red flags and risks?
Yeah, I think, like I said, going back 3 years ago when I first, come into the acquisition side of things with companies, when we'd receive a set of accounts, we'd actually, have to sit down with an accountant, probably around 3 or 4 hours worth of Zoom calls back and forth just to get to, EBITDA figures. But definitely with the AI prompts that obviously I've utilized from yourself, using Gemini, I was sort of getting those figures in seconds, which is a game changer for us. Having so many calls per week, being able to progress those deals as quickly as possible. As you know, like, momentum is everything when you're speaking to these business owners. They want to exit, especially with the potential budget changes coming up in April, maybe even in November. So Gemini is definitely helping excel the process when it comes to getting these calls to later stages.
Definitely. And guys, anyone listening that wants access to those prompts, they're completely free. This in there, just click the link in the bio and you can get your free prompt pack. It's definitely useful. You analyze it in seconds, like, what would normally take you hours to go through and really try to identify all the red flags and risks and questions you have to put together to ask about them. It does it all for you. It's incredible. And then I guess what's been some of the challenges along the way? What's the things that throughout especially the discovery process, what you seem to have found leads very easily. I guess you just kind of followed the process, and then you spoke to people, you built rapport with people, you managed to do a ton of deals. Like, what's been the challenges along the way?
There's definitely challenges along the way. It's not plain sailing, but I mean, there's all different things. I suppose you can deal with sort of difficult business owners. Definitely, dealt with a couple in the past. I think, a couple of the first discovery calls I ever jumped on, you think you were getting somewhere, and then the goalposts would change. Or, they'd have a different idea of what the acquisition would look like, post-acquisition. We've done deals where maybe it's been agreed that family members stay on within the company. That's definitely been a challenge post-acquisition. So I guess a lot of the problems, I suppose that, looking back, they were all definitely learning curves, I suppose. And, I'm probably grateful for all those problems that did come up. But yeah, I think definitely that was probably one of the, biggest problems we had was, definitely family members staying on post-acquisition. Yeah, that was probably the biggest problem I've encountered so far.
And if someone was about to dive into this for the first time ever right now, if you would give them just 3 words of advice, what would it be?
Just take action. If it was just 3 words, just take action.
I framed that completely wrong. It wasn't meant to be 3 words. It was meant to be 3 tips. So yeah, I like the 3 words. Just take action. That's amazing, because I agree with you. But give us 3 tips for a beginner.
I think just push the button. I think I consume so much information. Probably I was watching videos probably weeks too long. I should have actually pushed the button and started talking to the business owner sooner than I did. Because the biggest learnings definitely come from speaking to physical owners. And I just, the first couple of calls I was treating as training. I just thought, I'm going to use these as learning experiences, whether they progress anyway or not. They're going to benefit me. So that's definitely a piece of advice. I would definitely start speaking to business owners a lot quicker. And like I touched on, previously, I would just strip it back and realize you're just talking to another human being.
Yeah. I definitely feel like, having a transparent conversation and building real rapport, try not to make it too transactional, definitely a big factor throughout the entire process. And then I suppose off the back of that question, what's been some of the biggest learnings or takeaways for you, 4 acquisitions in, all done, 0 money down? What's been the biggest takeaways for you throughout the process up to now?
The process of actually structuring the deal?
Just the entire process from start to finish. You've been doing this for a couple of years now, 4 deals in. What's been the biggest learnings and takeaways for you?
I think the biggest learnings is there's definitely more than one ways to skin a cat, as the old saying goes. I've done deals probably in 3 or 4 different structures. Every deal's been slightly different. I think just, openness, be open to, even stuff like transition periods of owners. Things change, goalposts change as deals are getting structured. I mean, you could be on a call one week thinking the deal is structured a certain way. You jump on a call the next week, the owner's had a change of heart. They want to drag it out the next 6 months. So a learning would definitely probably be patience. You have to be patient with deal structure, and you have to. Sorry, someone's calling me. Patience. I think that's probably a key takeaway. You have to be patient when you come to these deals. Try not to force things, because I know you can probably get shiny object syndrome and try and force deals, but patience is probably key.
Yeah, no, it makes a lot of sense. And anything else that you want to say before we wrap the stream up?
I just probably, for anyone listening who's probably on the fence, looking to get into acquisitions, definitely look at the 5D portal and consume as much information. Honestly, all the information is on that portal for you. Like even everything from deal structure, discovery, outreach, everything is on the portal. So yeah, definitely start sooner.
No, I appreciate that, Lou. We're gonna have to get you on again in a couple of weeks' time. Let's see where you're at with the new acquisition when that's over the line. But as always, really appreciate your time. And if you want, I think that it's about time before you go, give the Avery Hill plug. I definitely feel like that needs a plug. Tell us a little bit about it before we wrap it up.
Yeah, just sort of launched my clothing brand, Avery Hill. Modern refined heritage. I just launched a pre-order for the first drop, actually. 2 caps, signature caps, 1 in stone, 1 in sand. And more to come in December. Yeah, at Avery Hill Co.
Is it Avery Hill, at Avery Hill Co on Instagram, right?
That's it, yeah.
Cool. Here we go, guys. So that should be at the bottom of the screen now. Give Avery Hill a follow as well. I'm still waiting for my cap when I need that sent out me.
You have to say to get it to Dubai, D.
Yeah. I don't mind. Yeah, definitely. Now, appreciate your time. We'll catch up soon. Cheers, Lewis.
Cheers, D.
Cool, guys. So, yeah, I guess that's the end of the first SMB Show episode. Hope you enjoyed it. As you know, we get going a little bit more when we start to get to 2 to 3 streams a week. We'll take on more questions. As usual, we'll be covering anything that's going on in the market, bringing on more guests. If there are any guests that you think would be useful to bring on an interview, cheers, Pam. Really appreciate it. Then definitely drop me a message or email us at live@thesmbshow.com. If there's any guests, any suggestions, we're open-minded. And then on the next stream, I'm hoping the actual dial-in or text message will be up and running ready for you guys. But we can't wait for the conditions to be perfect to get started, right? And that goes for everything. So glad you enjoyed the session. For those that tuned in, and one moment, what's the thoughts on buying an investment company? Could you elaborate a little bit more on the investment company? Cheers, Dom. Appreciate it, mate. If you could elaborate a little bit more on what you're thinking about investment company, then we'll get that answered before we finish up. Hi, James. So yeah, if you could send it to live@the SMB Show, it's across the bottom of the screen. If you could email that email address, that would be the best one. I'll leave that at the bottom of the screen for now. Yeah, no problem at all. Let me just quickly pop that in. You're on the YouTube. Give me 2 seconds and I'll pop that into the YouTube. Do you know what, James? I'll pop it in the notes after this because I'm streaming from StreamYard and it's not allowing me to do it directly from here. But I'll pop it in the notes afterwards just so you can see that. Pam, like a brokerage that sells commodities. Yeah, I don't see why not. I think that there's going to be there's going to be some more moving parts and slightly more complex than usual. But yeah, I definitely feel that. I'm trying to think, actually, there's a guy in the group, Adam Naeem, that was looking to buy something similar to this. It was actually a family office in Singapore, but they did have a commodity desk as well, property bonds. Yeah, of course, it's going to be a slightly more complex transaction, but also what it does do is open up institutional grade investment as well, which, you know, for those sorts of deals, you're probably going to need. So yeah, I think so. I think that the discovery process is going to be a little bit more in depth than your traditional small business. But yeah, Pam, yeah, definitely, yeah. In the 5D group anyway. So yeah, if you have any questions, just drop me a message inside the community. Give me a direct message, and I can take a look for you. So, guys, cheers. We'll wrap it up there, and yeah, I'll see you in a couple of days when we stream again. Cheers, all.